Good afternoon, dear readers, viewers, ladies and gentlemen, friends, and thank you so much for tuning into this special series on the budget. As you are aware that at ETBFSI, we have been running this live show on the budget every Wednesday, and we already covered the economy, the NBFC, and today we are going to cover insurance, and in next chapter, we will be covering banking as a whole, and we'll try to explore what are the expectations that the leaders from that particular sector has from the finance minister who's going to deliver a union budget on 1st of February. In today's topic, which is insurance, let me tell you the background quickly again that we are going through a little tough time globally because the global tensions, political, geopolitical tensions are really high. Inflation, interest rates are also high. Credit growth is significant, but the capex cycle is still very down. Under these circumstances, the government is going to present budget on the 1st of February, but still every sector should get a major boost, and a lot of sector have some remarkable expectations from them. In this particular segment today, we are going to talk about insurance, not just life, but the insurance as a whole, where general health and life insurance, as well as the pension, and also a little bit on the personal finance, which is taxation side in this particular sector, in this particular session. So let me welcome the speakers that I have for this session. My first speaker is Mr. Nilesh Sathe, the former member of IRDI, who's also on the board of many companies. Mr. Sathe, glad to have you.
Thank you so much.
My next speaker is Mr. Sharad Mathur, MD and CEO, Universal Sompo General Insurance. Mr. Mathur, glad to have you.
Thank you so much. Pleasure.
My next speaker is Mr. Vignesh Shahane, MD and CEO, Aegis Federal Life Insurance. Mr. Shahane, glad to have you. And my next speaker is Mr. Shyam Sundar Baliga, the CEO of Kotak Pension Fund. Mr. Baliga, glad to have you.
My pleasure. Thank you for having me.
Thank you so much. And dear viewers, readers, friends, if you have any specific questions, please shoot your question. I will try my best to take it with the panelists that we have. So, gentlemen, let me begin by asking you a very, very simple question. And I will start with you, Sathe sir. The basic question, which is for all of you, is what are your budget expectations?
Yeah, Amol, actually, this is going to be the last budget of the present government because the next one is not going to be a full budget. And as such, personally, I am of a view that budget is not likely to be a tough one. And there will be some soaps which will be given to all sections of society, including the rich and the poor, and maybe some tweaking in income tax slabs also may happen. From sector perspective, I'm not expecting much from this budget because there have been demand on a couple of sections to be liberalized, like ATC from 50,000 limit, 150,000 limit, maybe increased to something like 2.5 or 2. It may happen also, but then that doesn't effectively make a great change in taxation. So from insurance perspective, what is most important and what is required for ages, they have been crying actually, is income tax on insurance companies. You know that insurance companies do not make profit as such. They are taxed on surplus. And this tax on surplus, which used to be, which is even now at 12%, and this 12% has been there when the corporate tax used to be at 70%. Now, when corporate tax has reduced to 25% or 30%, it's quite prudent that this 12% should be reduced to 6% or so. But this has not been done. And that is impacting the profitability of insurance companies. So these are a couple of points which come to my mind, which finance minister should look at, but not sure whether she will look at.
Right. Again, I mean, whether she will look at it is a different question, but it's good to share those thoughts, at least let them know and repeatedly again and again that these are the questions that we have. So thank you, Mr. Sathe, for sharing those points. Let me come to you, Mr. Mathur, and take your perspective in terms of your opening remarks or your expectations specifically from the industry, from the budget.
So, insurance industry has been anticipating various reforms in the tax and regulatory space. positively boosting penetration and insurance awareness. So considering that we are a country of over 1.35 billion population, where majority of it falls in the age group of 25 to 35 years, there is a huge need for protecting one's life, health, asset, and this task can be better performed by insurance sector. I'm referring to social security, insurance inclusion, and further data security cover limits can be introduced with cyber insurance. So union budget can support insurance sector by considering inclusion of all such benefits, and they can certainly support increasing insurance penetration, which is still very, very low in our country, in spite of so many developmental initiatives taken by the regulator, by central and various state governments. And so just coming to two more critical points, like risk management is largely missing in small businesses. So contribution of MSME to our GDP is substantial and growing at a considerable rate. However, the risk management of such entities is not strong compared to their counterparts across the globe, and even in comparison with large enterprises in our country. So there is a need to protect MSMEs from industrial, professional, and commercial risks, which could be done by incentivizing the SME sector for covering such risks through insurance, which will going to play a pivotal role. And we see natural calamities. So large part of the population and their assets are uninsured still across the country. Increasing incidents of natural calamities have severely affected lives and livelihood of people. So right kind of encouragement for such segment of the population to adopt insurance habits could subside effect considerably of such calamities on personal lives and livelihoods, as well as the economy of the country. So these are some of the thoughts which maybe at a broader level, if can be considered, which we anticipate by our decision makers, by government, by finance ministry, would going to help the insurance sector, insurance inclusion, and enhancing social security in the country.
Sure, meaningful thoughts, Mr. Mathur. Let me come to you, Mr. Maliga, and understand your perspective on the pension side.
Sure, thanks. First of all, from an overall budget point of view, we expect this will be the broad theme will be growth with fiscal consolidation. Growth, yes, externally it's a little challenging environment, but India is looking far better. Still looking at growth of say around 6 for the next financial year, 6%. And this government has always been fiscally responsible and fiscally almost conservative. So we expect the fiscal deficit target of 6.4% for the current financial year to be met. So while the expenses have gone up, but the tax revenues have also been buoyant. So fiscal deficit is on track, and for the next financial year, in line with the 4.5% fiscal deficit goal for 2 years down the line. Next financial year, FY24, we are expecting say 50-60 basis points further reduction in the fiscal deficit. So that's the broad theme: growth with fiscal consolidation. But yes, it's a pre-election year, so some amount of welfare spending can be expected, but it will be funded out of tax revenue, savings in subsidies, and privatization income. The other major theme will be a thrust on capex because it has got multiplier effects on the economy, and the multiplier effects run for a long time, couple of years. And the other broad theme can be a significant push to the manufacturing sector, so making India theme and the PLI. Coming to the pension sector specifically, the pension sector, the pension penetration in India is very low internationally compared. So in terms of pension assets, we are at an estimated 36 trillion rupees, which is around 13-14% of GDP. This compares with an OECD average of around 69%. So we are way behind the pension penetration. But having said that, we're not expecting major reforms from a union budget point of view, because the reforms have already been initiated a few years back. in the form of National Pension System and Atal Pension Yojana, both regulated by the PFRDA. Both are world-class products already, and NPS is probably the most cost-efficient and actively managed product globally. It is growing rapidly. Returns are good. The regulator is already doing a lot of work for promoting awareness and uptake. So we are on the so from a pension sector point of view, while there is a long way to go, it is already on the right path. So no major reforms expected, but yes, a few incremental developments can always be considered. Say for example, EPFO registration, which is mandatory for companies more than 20 employees, it can be made more flexible by allowing a choice between EPFO and NPS, for example. Tax benefit on employers' contribution, which is 14% for government sector and 10% for non-government sector, that probably one can consider bringing the private sector at par. So some incremental steps like that, but by and large we expect so on overall budget point of view, we expect stability kind of budget, and pension sector point of view, not expecting major because we're already on the right path.
Sure, Mr. Balika. Mr. Shahane, can you hear us? Can you unmute yourself? I'm unable to hear you, Mr. Shahane. No, I think there is some audio issue. I think I would suggest you, sir, to I think some audio issue at your end. Can you just maybe rejoin or something? Let me ask my technical team also to get in touch with you meanwhile, and I will move on to other question then. So Mr. Sate, meanwhile, Mr. Shahane will join us very soon, I think. Let me get you back into the conversation, and so one point is obviously on the profitability, right? But on the penetration side, which is the larger issue, because now the companies came into the existence since more than 2 decades. I'm talking about the specifically private insurance companies. It's not that they did not cater to the new customers, or penetration did not reach to a next level. It's not that. The point is, it didn't reach to a level where we were expecting, or it has not covered the area which we wanted, right? So if you look at broadly that issues, what is it that government should actually do? Or is there anything that the government can do in a budget?
In a budget, see, budget is only a short-term, 1 year perspective, but penetration increase is happening. The only question is, why is it that the penetration is not increasing? Just take example, you said 20 years ago the sector was open for private companies. But Amol, in the last 10 years, not a single license has been issued to life insurance company. Not issued means they have not come forward for getting a license. Why is it so? This is something which government should think of. Of late, now the regulator has woken up and has proposed many changes. But then for 10 long years, why is it that not a single new company ventured into life insurance? The basic answer may be one, life insurance contract is a long-term contract and the profitability is not quick.
Right.
It happens only after a couple of years. So gestation period is quite long. And if you are taxing these companies at a high rate, it's not at 25% or 35%. See, we have been seeing that the corporate taxes have been reduced time and again. But that has not happened in case of life insurance companies or insurance
Right.
companies. Now, government, this is something which government should look at, that if I'm not able to generate profit for huge amount of capital that I'm putting in, maybe after a couple of years also, then why is it I should enter this market? And indirectly, since not more players are coming, obviously penetration is not increasing. This is also one of the reasons. This is one important aspect which government should look at, that the income tax rates, corporate tax rates on life insurance companies have to be brought down. It goes without. And this is something which has not been looked at by any finance minister in the past. So this is one thing which comes to my mind.
Certainly. In fact, the point is absolutely valid that no one has applied for a life insurance license in a decade. Whereas majority of companies are entering into the health insurance space because and
Yes.
they're yeah, absolutely. So let me move into Mr. Mathur now, and take more perspective on the health insurance side and overall the general insurance side. So Mr. Mathur, always there is a discussion on how the slab from 25,000 should increase to 50 or maybe 75, which has not happened. By any chance, if it happens, what difference will it make? Has the COVID actually made people aware about the health insurances policies? And do you think that the government should additionally do something, so that policyholders or maybe customers can look at health insurance very positively?
Yeah, so absolutely, COVID has supported the flip side on increasing awareness among people. So in our country, about 35-40% population is covered with some or the other kind of health insurance, including government schemes. One issue that I see is that people here are willing to invest more in insurance, buying insurance, considering the need to protect their life and health. However, these deductions tend to become a hindrance as people think that they should invest only up to the maximum amount of tax deductions that is available. So insurance companies, on the other hand, have tried their best and continuing to reduce the cost of insurance products, especially health, to support health insurance inclusion and increasing penetration in that space, which is very critical. And we have seen as a result that health line of business today has been the fastest growing line of business and is fairly competitive. So government, as I was mentioning earlier, that it's a habit. We have to make each Indian habitual of buying insurance. So even if they are considering the deduction as a limit to the extent they should invest in buying insurance, they so government can play a role till such time we have awareness where people make an informed decision of buying health insurance. So to continue to consider giving relaxation by increasing deductions under applicable sections.
Sure. I think valid points there, Mr. Mathur. I think Vignesh sir has joined us back. Mr. Shahani, can you hear us?
I can hear you, Amol. Can you hear me?
Yes, very good. Thank you so much. I think there was some technical glitch, but I can hear you loud and clear. So please go ahead with your opening remarks, and I would like you to tell us what are your expectations from the budget.
Okay, I'll be just incremental in what other panelists have said without taking too much of time. I was thrown out of this panel meeting for some time. But from a life insurance perspective, our wish list has been the same for the last 3 to 4 years, Amol. But what makes me very hopeful this year that the union budget, which is a much anticipated one-time event, will bring some happy tidings for the life insurance sector are the following. One is the first one is insurance funds in infrastructure growth. Now, to fuel infrastructure growth and to kickstart the economy and to generate employment, which is the need of the hour, I think insurance will play a very important role. The second reason why I'm saying, second reason why I say this is because COVID, which happened about more than a year back or 2 years, left us all very badly exposed. I think the out-of-pocket expenses for health insurance were more than 70%, and the number could be much higher for mortality also. So COVID left us very badly exposed. Now, I've been in this industry for almost 2 decades, and especially after COVID, I see a heightened sense of conversation, dialogue, consciousness about things like low penetration rate, high protection gap in different circles. And the fourth reason why I mention that I'm hopeful this year's budget would bring good tidings is that the regulator seems to be on overdrive and is taking positive, firm, definitive steps in trying to reduce the protection gap and increase the penetration of insurance. So uh, I don't know whether this answers your question, Amol, because I was out of it for most of the time. But to my mind, These are the expectations, and this time I think, although our wish list has been the same for 3 to 4 years, this time I think I'm a little more optimistic.
Certainly, I think it's a very valid point and must say a very important ask. And just to add, Mr. Sathe raised a very important point here that the government should look at life insurance, with sincerity and emotionally, because no company has come into the picture, no new company has come into the existence in last 1 decade. I think so. I think your ask is quite reasonable, and I hope government will look at it. Uh, Mr. Baliga, let me come to you and take or maybe learn more from you on a pension side. So you partly mentioned that the government has already done something really better on the pension side, whether it's Atal pension or NPS, right? Then why the people are still not falling for it very aggressively, or must say that people are thinking about it pension, and because large population still thinks that they need a pension plan because most of the people are working either on private or unorganized sector. So where is the lag, and what is it that the government can do in specifically bridging that gap?
Uh, what is missing, Amol, I think, is the nothing specifically that the government needs to do more, or PFRDA. So the industry has been set on the right path already by the government and the regulator. What the industry needs to now do is to increase the outreach to employers as well as employees and to the public in general, to make the people, so increase the awareness of pension products, increase the awareness of importance. The general tendency of a saver or investor is to postpone, because retirement is something which is going to happen a few decades down the line, and the tendency is to cross the bridge when you get there. So people, there is a tendency to delay the accumulation phase of pension. So what is required is more from the industry, not from the government. The government has done its bit, uh, and we have seen the pension uptake really going up. So in the last few years, so NPS and Atal Pension Yojana put together, the number of subscribers has crossed 6.1 crore or something like that. So the uptake is very good. The number of new NPS accounts opened every year is close to a million accounts every year, and it is growing at a healthy clip. It is growing by 15 to 20% each year, and the total AUM, assets under management of NPS, is now 8.5 trillion rupees, 8.5 lakh crore, and it is getting to be a significant part of the overall pension assets in the country. And the overall AUM also is growing by, so last 12-month growth of AUM is 22 to 23%. So the pension sector has really now picked up pace in the last few years, and we see a long runway ahead, and next 5 to 10 years we see a significant growth in the pension sector, and the uptake in general, because there is so much potential pending, and the awareness is continuously increasing now.
Okay, sure. That's a positive sign, but nothing that you expect specifically on the incentive or the relief side, because I think last year the government had given some relief and added, extra bandwidth to the the pension exemption, right?
That's right. So incremental steps are always possible, Amol. Nothing fundamentally or structurally required to be done, but incremental steps are possible. Now, for example, for the government employees, 14% of employer contribution is tax exempt in the hands of employee.
Right.
The same for the private sector, it is 10%.
Hmm.
So if my employer also is allowed to contribute 14%, and it is tax free in my hands, it obviously it increases the uptake in the non-government sector, which is the faster. So non-government sector is now growing at 30% or more, 31% in terms of pension uptake. So that is something which can be looked at. Like I said earlier, corporates can be given an option of selecting between EPFO and NPS for registration. So today EPFO registration is compulsory. Yes, sir, before Mr. Sate adds one last point. Some relaxation is possible in terms of taxation of annuities. Although it is completely debatable whether to, whether it should be made tax free or no, it is debatable. I can present both sides of the argument, but yes, from a larger goal point of view, that annuities do help in creating a pensioned society. So from that point of view, some at least annuities can be brought in par with pensions from a taxation point of view. There is a difference, slight difference between pension and annuity taxation.
Right. Sure. Yes, Mr. Sati, you want to add something?
Yeah, I wanted to add on this. Actually, world over,
Huh.
insurance companies have been covering two sets of risks. One is risk of dying early, and second is risk of living too long. Now, after the NPS was set up, this particular aspect of living too long was not taken away from life insurance companies, but uh, com- one more avenue was made open to the public for contribution towards pension. In the meanwhile, what has happened? Every time people keep comparing between what are the annuity plans of insurance companies versus what are the annuity plans of NPS. Now, why there should be some sort of debate between whether NPS is good or life insurance annuity is good? Let everything be on uniform platform and let people choose. Like 50,000 exclusive benefit is given to NPS contribution over and above ATC relief. Everybody knows it is under ATCC D2. Why this has not been given to life insurance companies? You give them. Ultimately, the purpose should be that the penetration of pension should increase. Whether it is going to life insurance company or NPS is different.
Right.
It is not putting A against B. Government view always should be overall growth. Whether it is
Right.
coming from NPS or it is coming from life insurance companies, it is coming from sector or the schemes of mutual fund.
Yes.
Ultimately, what is important is from non-financial assets, people should move to the financial assets. May it be a
Absolutely.
bank deposit or mutual fund or life insurance or NPS, whatever it is. So that should be the aim. And from that perspective, one option should be available to the customers, and there should be parity in the scheme. Like in case of employer contribution, also there is no parity. In case of this 50,000 relief, there is no parity extra over and above. So why this should happen? Let people choose whatever is good. Ultimately, if the return of NPS is better, why somebody will put money in life insurance companies, annuity plans? They may
Agree.
not. But at the same time, the fact remains that the agency force or the distribution channel that the insurance companies have is so strong that they can reach to the nooks and corners of the country. And in the process, maybe some sort of, along with life insurance, some annuity market will also grow. So this is something which I wanted to suggest to government, that we should have uniform structure for everybody rather than giving something special to one sector and not giving that to others. Now just take example of fixed deposit. If they are 5 years and above, they are entitled under ETC. All insurance plans are 5 years and above. So there is no question. This is parity.
Right.
If you have got a 3-year fixed deposit, you don't get ATC relief because ATC essentially is for long-term investment.
Right.
So understand what is importance of it, and give more options to the customers on same platform. This is what I want to supplement to Mr.
For
Bhadeja
sure,
said.
I think your point is that the government should look at it as a pension as one domain and
Yeah.
not whether it's coming from insurance or pension or some other ones. Sure, noted your points, Mr. Sate. Mr. Shahane, let me come back to you and learn more from you specifically on the ATC part, where we are talking about the limit should increase from 150,000 to more. Do you really believe, considering, again, the limit is looks very limited, I mean, the 150,000, because many more products are already part of it. So, do you think by any chance we have reached to a level where people will look at life insurance very as one of the integral part, and once the limit goes up, maybe from 150,000 to 250,000, people will buy insurance very aggressively, and it will really boost penetration. Do you think so, considering the background of last 2 decades?
Yes, Amol, I think so because whether you like it or not, it's a reality that a little nudge or a little stimulus or a little incentive which a tax rebate or tax swap or tax deduction gives you helps in a long way in creating that little bit of awareness about insurance, and then we can go deeper. So a little stimulus, a little incentives, taxes do play a role, and I think they have an important role to play. Coming to Section 80 Triple C, I think that bucket of Section Triple 80C is very cluttered. It's got EPF, PF, interest on housing loans, nationalized deposits, also life insurance premium. So I think one option on Section 80 Triple C is that it should be decluttered to some extent because the Section Triple ETC limit of 1 lakh 50 or now has become 2 lakhs has stayed for a long time. People's salaries have increased, so a big chunk of the Section 8 Triple C gets taken up by the PF EPF contributions of especially salaried individuals.
Hmm.
Uh, the second thing which they can, in lieu of decluttering Section 80 Triple C, which might be difficult, would be to enhance the limit of Section 80 Triple C to a little higher limit, or or carve out a separate section for life insurance. Alternatively, the third thing which I would suggest is within Section Triple ETC, since there's a huge protection gap and since COVID has exposed, as I said earlier, and the need for protection is great because something like COVID can happen again, is to carve out a separate section for protection products in the Section 8 Triple C. Maybe 50,000, maybe 75,000, and probably also health. So I think, Amol, to answer your question, these are three things which it's a wish list. But yes, taxes do play an important role in creating that nudge, in creating incentive, in creating the initial stimulus for a person to buy insurance. This is what I believe.
Hmm. Sure, sure. I think valid point. People will obviously, if there are some incentives, I'm sure the insurance will become a little attraction for them. No doubt about it. So, Mr. Mathur, my question is specifically on the customer front, also on the taxation front. So, sometimes believe that I'm being cheated because the earlier the GST was not there and only service tax was there. So the taxation rate was not more than maybe 12 to 13%. Suddenly it became 18%. So I'm paying more money, right? On the other front, when I'm buying a vehicle, there is also, I feel that double taxation because I'm paying a GST for vehicle and again I'm paying for a protection as well. Do you see, these are the issues that you also face, other customers are raising?
Yeah, so absolutely, you're right. As a customer, I also see them as an issue. As part of the industry, clearly it needs clarity in the taxation of insurance business because if you see, insurance industry is governed by a separate tax regime. And however, this regime was enacted long ago when the insurance sector was controlled by government-owned companies, especially. And RDI regulations were announced in the year 1999, followed by opening of foreign investment in the insurance sector. However, a change in tax is yet to see a light of the day. That is continuing as it is. And as part of the insurance sector, we are very much hopeful that upcoming budget will surely provide the much needed clarity on the direct tax provisions for insurance business and especially synchronization of central and state government for levying indirect taxes, GST provisions, audit on insurance sector to avoid diversion tax position leading to prolonged tax litigations. So this clarity as happens, it will become easy for insurance organizations as well as for customers to not only understand the complexity which exists currently, but also to be able to relate with the kind of taxation which is required in the sector.
Hmm. Right. Yes.
Yes. Uh, Amal, actually, what Sharad has said, let me supplement it.
Uh-huh.
The service tax used to be 6%, 8%, 10%, then 12%,
Huh.
which increased to 12%. Now
Right.
the question is, GST is tax. GST should be applied on what?
Hmm.
GST should be applied on luxuries, not on necessities.
Hmm.
Health insurance or term insurance is a necessity. Technically, it should be kept away or out from the GST. Uh,
Hmm. Hmm.
but government has been earning huge amount of money on account of GST. Why I was not raising this issue? Because GST is not coming into this budget because it
Absolutely.
is a part of indirect tax. This is a direct tax which we are not discussing. But the fact remains that government should really look into this aspect because it is detrimental for the customer to pay 18% tax for health
Hmm.
insurance, which is actually a necessity, or for a term insurance, which is actually a necessity. So it should be kept away from taxation, or maybe some nominal tax can be levied.
Hmm.
But since this is not the area of today's discussion, because we are discussing on budget and direct taxes mainly, that is why I did not raise it. But it's really atrocious to charge insurance premiums at 18% rate.
Absolutely, absolutely. Again, I thought it's a very important point, so that and all the experts are here, so I thought I will raise that point. No matter it's not going to be part of budget, but I hope at least the GST Council looks at it, because, as you said, it's a atrocious tax. So, but quickly, let me take your view also on the the new bill which the government is talking about and may speak about in the budget, the insurance bill and the proposed changes. Any thought on that in terms of the changes that the new insurance bill is talking about, specifically the amendment which they're talking about of 2022?
Uh, See, actually, it was in 2015 that it was amended last. And in the last 5 years, a lot of changes, 5 to 7 years, a lot of changes have happened.
Yes.
A couple of things that should be done also can be discussed in the parliament. One is liberating investment pattern of insurance companies.
Hmm.
They have to invest necessarily almost 50% in government securities.
Hmm.
And the government securities rate of interest is coming down.
Hmm.
And effectively, when you cannot generate competitive rate of interest, you cannot give competitive rate of earning to the customers also.
Hmm.
So the insurance product becomes uncompetitive because all other investment avenues that are available do not have this compulsion of investment in government securities,
Hmm.
except in case of life insurance companies. Why that should happen? I'm not saying if it is liberated, the companies will not invest into government security, because everybody wants safety of investments first, especially for life insurance. So they will. But then some flexibility will be available. Instead of 50%, if it is reduced to 40% or 25%, then the return on investment will go up, and life insurance will become a more attractive product from investment point of view as well. So this is something which, in addition to whatever proposed amendments are there, this is something which should happen.
Hmm. Sure, I think uh, good chronology there. I hope the government looks into it. Uh, Mr. Baliga, is there a still debate, and do you think that the government should maybe clarify or maybe give some strengthen this particular aspect in terms of the insurance companies offering pension products, the mutual fund companies offering pension products, and the Atal pension and the pension schemes, you know, have a different regulators. Do you think that the idea of the PFRDA, which pitched long back, that they should be monitoring and regulating all the pension products, something like that should happen, so that the focus will be on one area, one domain, and perhaps it will help government at also large in terms of boosting the pension penetration aggressively.
Amal, what I think is pension as a product or a service should get a common platform across industries. So whether a pension product is being offered by a PFRDA regulated entity or an insurance company or a mutual fund, it should come at par in terms of tax treatment. So that is fair for the customer and that is fair for the entire industry. So whether administratively it should come under one regulator is it's more of an administrative call. It should not matter so much so long as there is coordination between the concerned regulators and they put it on a common platform. So Mr. Sathe sir made that point at the beginning that it should it should be at par treatment for taxation, regardless of which platform the customer chooses for a pension product.
Sure, noted your points. So, Mr. Mathur, let me come back to you once again. And I think we saw a little difference way before COVID. I think when the Pradhan Mantri, Prime Minister Narendra Modi launched these two, three policies, Pradhan Mantri Jeevan Jyoti Yojana and Suraksha Bima Yojana, which actually made a lot of people aware about insurance very aggressively because the premium or maybe the tariff was really low and that was pitched by or sold by the PSU banks itself. Do you think that some aggressive revolution in that front needed from the government side? They're already doing a lot of things in the crop insurance or the agriculture or the specifically farmer side, but on the health side, there are some policies by the states. But do you strongly feel that considering the large population, right, and the growth of insurance penetration specifically in health is not as great as we expected or we want, do you think that the government should look at that in an unusual aspect?
Yeah, so among all governmental schemes like Prime Minister Fasal Bima Yojana, which is fairly popular, the way it has been advertised and the way entire team behind, which is working to popularize it and to administer the whole process, including insurers, which are part of the program. So Prime Minister Suraksha Bima Yojana or PMJJY for life insurance companies. So where banks are participating more to promote or insurers are settling claims. So government has already considered in terms of increasing pricing by a bit to make it sustainable for insurers because the price was set at the time of its origination quite a few years ago, and many insurers were finding it commercially unfeasible. So government very proactively at this juncture, very recently, increased premiums, and still we see that offtake has not affected in any way because it's a very nominal hike. So likewise, I think popularizing these schemes would play a pivotal role, which I feel that to some extent there is a fairly sizable scope for all stakeholders, be them banks or insurers, participating insurers or even government. Collectively popularizing these schemes will going to help because insurance awareness has to be brought to the fore when we talk about insurance penetration, whether on a population base or contribution or its contribution to our country's GDP. So in health space, if we see that government is working, National Health Authority is working on trying to bring most of it under one roof, which will integrate all activities from customer acquisition or distribution of health insurance covers or servicing of health insurance, claim settlement, and so on. So these initiatives, I'm sure, will going to help in awareness of health insurance, acceptance of health insurance among public at large, and also when if the servicing will become smooth, claim settlement will become smooth as everything would be integrated. So it will work as a sweetener for policyholders. God forbid if someone gets admitted in the hospital and has to make a claim and everything happens very smoothly. So that becomes the moment of truth for the end user policyholders. So I think government is very clearly thinking in this direction, end-to-end awareness, penetration, and then actualizing the whole thing. So I think a little more focus, impetus in or investments maybe could be collective, including all stakeholders, in popularizing health insurance, especially or such governmental schemes, will remain decisive for the progress of insurance sector and insurance inclusion at large.
Hmm.
And
Sure.
and and, and if I may, just touch the pension and annuity
Hmm.
products,
Hmm.
I see
Hmm.
that a pension and annuity products should be granted tax exemption in the hands of the policyholders, because we need to understand the fact that the cost of living is increasing rapidly. The returns which banks offer to its depositors barely cover the inflation rate. So hence, investors see pension and annuity products to protect their future or retirement, post-retirement requirements. And if such products continue to be taxable in the hands of the investors, the tax rate is likely to take away the major chunk of the proceeds. So the in the interest of again our population, the government should consider making pension and annuity products tax-free. So this will also, such things will going to support the overall initiative of insurance awareness, insurance inclusion, and increase in penetration.
No, sure. I think this is a good update for Mr. Baliga as well. Thanks, Mr. Mathur, for adding it. To be far more beneficial for Mr. Baliga, but a very relevant point. I think there is something badly wrong with, Mr. Shahane's network. I guess he tried his best to join, but I think again there is some network issue. Let me come to my last question, because I think we still have 3-4 minutes left. It's already been 45 minutes since we are discussing this, and take your views on specifically about, obviously we discussed a lot in terms of the expectations, but if we have to think about and maybe give a suggestion to government, please don't do this, what would it be? So the question is, what is it that you don't expect from the government at all in the coming budget? And I will start with you, Mr. Sathe.
No. See, government will not do, I'm sure, because as I said, this is the last budget, so it will not be a harsh budget. Uh, Government should not keep increasing the rates. Actually, the taxation rates
Right.
should not increase. This is something which should not happen, and they should not, remove the incentives that are available for customers for putting their money in long-term savings. This is something which government should not or may not do, I will say.
Sure. Mr. Baliga?
Okay, interesting question. I would say the biggest challenge for the government to resist this time is to go overboard with a little bit of populism, being a pre-election budget. So I am, generally this government has been very responsible and conservative, but there is a temptation, of course. So I am hoping that that is one thing they should not do, not go overboard with freebies and populism, and deliver a fiscally responsible budget, bring down the fiscal deficit by 50-60 bips, and bring it on the path to 4.5% in 2 years' time. So that, a well-managed fiscal will take care of most issues of the economy.
Sure. And Mr. Mathu, once again, come to you, and your maybe a wish list in terms of what should not be there.
So I share same understanding like Mr. Sathe and Mr. Baliga. So burden should not be increased. Already tax levels are appropriate, and many of us feel that they are high. So we keep talking about increasing deduction limits and so on. So government should not consider any further increase to make it even tough for anyone to participate in insurance buying process or overall per se. So this is one thing which government should do by not considering increasing taxes or any form in any way.
I'm sure. Let's hope that, and let's also hope what we discussed in terms of expectations, that the government at least give some justice to it, because it's a pending. The margins really long, specifically on the the exemption side of life and health both. Remarkable thoughts here. There were some questions, but I think we partly discussed them in our conversation, so I didn't take them, and few of them were a little out of the arena of budget, so I didn't take them. But thanks, readers and viewers, for watching our show and sharing your thoughts and questions as well. And thank you, Mr. Sathe, Mr. Mathur, Mr. Baliga, and Mr. Shahane, who could not. I think some technical issue happened there. for sharing your perspective here. It's a great learning for all of us, and let's hope that government will do what we discussed, at least in some extent. Thank you so much for sharing your thoughts.
Pleasure. Thank you, Amol. Thank you.
Thank you so much. Thanks.
Thank you.